Okay, today we are wrapping up the 2024 real estate market and we are looking ahead to what 2025 has in store for real estate. I think it's incredibly important to note that 2024 projects to be the lowest amount of transactions we've seen in the real estate market since 1995. That is incredible given the last 3 years. They've been the highest in the history, and that makes this year feel really, really bad. So hats off to you. Kudos if you're still selling houses in this market, if you're still wholesaling in this market, if you're still flipping in this market, you're one of the professionals. Now, this year has seen interest rates up in the mid 7% for first-time home buyers. We've seen low transactions, and we've seen slow to no to negative growth in housing prices, depending on what market you're in. And across the country, I want to share some stats with you for 2024. There are people who have kept their interest rates on their house. So we have interest rate lock, meaning a lot of people have this 2 to 3% mortgage rates, and they are staying in their houses, which means less attractive inventory for us from some of those good properties. Now, it doesn't mean we don't have more inventory, because we do actually have more inventory on the market. The last 2 years has been incredibly tough. Let's go through some statistics. Number one, we had a presidential election this past year, which basically froze the market. I've mentioned previously. Number two, we have not seen a lot of wage growth to catch up with housing affordability. If you don't make more money, it's hard to pay more money to live in a property. Typically, rule of thumb from advisors is your mortgage payment should not be more than 30% of your income. So therefore, if you make $10,000 a month, your mortgage payment should not be more than $3,000. That means a lot of different things depending on the interest rate. A 7% interest rate at $3,000 a month payment is only going to get you into a $200,000, $300,000, or $400,000 house. And if you have a 2 to 3% interest rate, that could get you into a $700,000 house. Completely different house. So that's been a big effect on the market, the lack of wage growth. There's some other things though. Pending home sales eked out about a 3% year over year gain this past September, which was maybe the worst ever. It just has not been very good. Inventory of both new and existing homes is increasing, and the U.S. population has also grown by 70 million since 1995. Even though home sales have remained mostly at 1995 levels, which the good news for that is there's still demand, even though inventory is rising. So over the next 2 years, what can we expect in the real estate market? I think that existing home sales, the amount of sales that are transacting on the market, is going to increase in a meaningful way. We just had an election. It was favorable to what everybody wanted. And now people are more confident in buying, and the demand is still there. So even though there's a lot of inventory, I think we're going to see a 10% increase after a 20 or 30 year low in transaction. We'll see about a 10 to 15% increase in transactions. So houses will move. That's great. And I would also expect much of the same for 2026, where we will also see a 10 to 15% increase in transactions on the market. So the amount of transactions are going up, but I don't expect the mortgage interest rates to move a whole lot. I think you're going to really struggle to see us get below 6% in 2025. You may get down towards 6%. I would anticipate mortgage interest rates dropping below 6% in 2026. And that has to do with a lot of things in the economy. But the reality is we hope for it to drop very quickly, even as we see the rate cuts happening from the Federal Reserve. But we've seen a couple rate cuts already, and it's barely moved the market. In fact, the mortgage rates have even ticked back up slightly to about 7.05%. Okay. Home prices are likely to stay pretty stagnant. I would not expect more than, say, 2% growth. As it stands, we're right around that $400,000 to $415,000 median price point nationwide. I would expect us to grow maybe 2% in 2025 and maybe 2% in 2026. Here's the thing. I want to talk about what we're seeing in the market and what we can expect to see in the market in terms of the buyers. We're seeing more buyers are paying cash for their houses. How in the world could people do that? Well, it's because they have a ton of equity. They cash out the property they live in. They're able to pay cash. 31% of repeat buyers nationwide paid all cash for their next home purchase. That's a lot of people. That's a third of the buying power paying cash for houses because mortgage rates just don't make sense and people have a lot of equity. Here's the other thing. First-time home buyers are getting older. The median age of the first-time home buyer was 38, which was an all-time high. The reason why it's older is they're having to save for a lot longer time. And they're tapping into their parents and people in their family who've built wealth over this big run up to get the money. And what's the evidence of that is that 25% of first-time home buyers use gift or a loan from a relative or friend for their home purchase. 20% are taking from other financial assets. So maybe their equities have grown significantly and they're pulling from that to purchase their house. In a unique turn of events during COVID, we saw the migration of people to suburban areas, the suburbs or more rural areas, and out of the cities because the cities were on lockdown. We are now starting to see that reverse a bit. People want convenience. People always want convenience. So you're seeing people come back to the cities. That's where the uptick in migration is going now. And here's another crazy thing is more buyers are pooling their money. Multi-general households surged to an all-time high of 17% of the past year. So this means we're having multifamily households. That is insane. What does that mean for us? That means for us, we need to think about how we design our properties that go to market. Our buyer is not a 20-something. They're not in the newest and greatest fads. They're closer to 40, and single women are outpacing single men. So a more feminine touch on your properties is probably going to be better for you than a more modern, strong, masculine looking property. So you should really be thinking about who your end buyer is on these properties as you get them to the market and as you anticipate really the flat next 2 years in the real estate market. I would say the market, the conditions, the circumstances we're in today are likely going to be what we see over the next 2 years. So if you can win today, you're going to win over the next 2 years. And then when you see a meaningful tick up sometime over the next decade, you're going to be absolutely dominant, similar to those who were ready to go and operating in the 2010, 11, 12, 13, and so on and so forth markets. Okay, the outlook for 2025 is much of the same. Minimal growth happening in terms of prices. We'll see interest rates bounce, but tick down a little bit. We'll see housing cost maybe increase 2% nationwide. And you're just going to have to be a professional in this market to be really dominant. So get sharp at your skills, get sharp at running your numbers, get sharp at designing your rehabs, and understand who you're selling them to. Thank you for joining today on another 7-Figure Flipping podcast. Let's go.